Hello, everyone. We're live now on the Save Canadian Mining series, and this welcome. Today we're going to be talking about monetary metals, and we're joined by some great people in that sector that can give us some insight and help us understand that sector and the opportunities there, and also understand Save Canadian Mining. I want to introduce my panel. I noticed the last time I did this, and I talked about where it is from my perspective. Actually, by the time it was recorded and sent back, it was different, and I looked like a bit of an idiot because everyone's in a different chair. So I'm not sure where you guys will actually end up in the overall scheme of the recording. But right now, as I look at the screen above me, I have Brian Boss from Neumeyer. Neumeyer is a fairly esteemed research house, and we actually hired them at Save Canadian Mining to do our research for us. And Brian is has a long history, and he was a floor trader initially at I think the TSE, and then he became a prop trader at Dundee. Then he went on the buy side at Dundee. So he's been at this market for many different ways, and now he's on the research side at Neumeyer, and we'll be interested to hear his forecast in gold and silver. On my top right is Keith Neumeyer from First Majestic Silver. That's the proper way to do it. Keith, you got the wave in. We now know it's you. And obviously, silver is rocking right now, and First Majestic is one of the biggest silver companies in the world, and we'll be excited to hear more about First Majestic and Keith's perspective on the silver market. And then to my right is Sean Rusin from Cisco Gold Royalties and other things. But obviously, Cisco Gold, Malartic Discovery, and their great growth and their gold royalties. Lots of stuff to talk about with Sean, and he's always an interesting and engaging guest. So we're very happy to have them on board. Welcome, guys, and thanks for coming to the show.
Thanks for doing this, Terry.
Okay.
Yeah, thanks.
So how I'd like to kick things off is sort of, why did we sort of start Save Canadian Mining? And Jane, if you could post that chart, this would probably be a good time to do it. Basically, we made the observation that, when the tick test was rolled back in 2012, that it sort of changed the fundamental structure of finance in the Canadian markets, not just mining, but we obviously are in mining space, so we looked at mining in particular. And one of the things we did when we hired Neumeyer, and we said, hey, we think there's been a problem here, and we'd like to know what the data says. So we had Brian and his team go away, and this is one of the things they produced. If you look at the chart, basically what it shows is that if you look historically, and the reason why the numbers don't go back a bit farther is that that's sort of the easiest. The TSX came into being sort of around then, and so it wasn't possible to go back. And then it was part Vancouver, part Montreal, part Toronto. We didn't have the resources to sort of make that historical thing happen. So this is what we could put together. And what it showed historically is that typically the TSX Metals and Mining Index traded at or above the commodity index. And then now if you look at the chart, you can see that it's radically different. So basically the mining and metal index is, basically at 35 versus say 100, where the rule changed. So we're off by 65%, whereas the commodity index was only off by 7. So what that means in layman's terms to investors is that stocks would almost have to triple in mining to get back to normal. So think about think about your mining portfolio and think about a triple. I think you'd be a lot happier if that happened. And certainly, if that happened, that would present a lot more financing opportunities for companies, so they could actually invest in and grow their companies in productive ways. So this is sort of why we started this. We think there's fundamentally a problem in the structural setup, and the tick test might be one of the ways to address it. We're going to talk about several others, but that was sort of the reason. So, Jane, let's lose the chart now and pop back up. And what I wanted to do is go around the horn here, and maybe we'll start with you first, Sean, and ask you, why are you supporting Save Canadian Mining, and what are your thoughts on this problem?
I think a lot of issues around the Canadian junior mining market, which has been the healthiest market and the biggest source of capital in the world for exploration and development, which is, sort of the primary ingredient to all this. But I think a lot of things we're going to talk about today are inherent in all the other growth industries like biomed, early, incubation tech companies, and the rest of it. And what has happened, I think, is, on a general basis, is that the The bigger institutional players have pushed pretty hard to make it very hard to be a small company in this market, whereas we used to celebrate that back when we had the Vancouver Stock Exchange, the Montreal Stock Exchange, the TSX. And we used to have people that were capable and sophisticated enough to invest in that. Now it's really a generational thing. Millennials really haven't stepped into the place. And we need to create an environment that people can understand the rules, have enough transparency to be able to make these investments and not to get run over by unscrupulous short sellers or other market forces that make it unpalatable to be a shareholder in these smaller companies.
Yeah, fair enough. Keith, what are your thoughts?
Well, I'm an ex-trader. I was on the floor of the Vancouver Stock Exchange from 1984 to 1989. So a lot of the practices that we're discussing are practices that I actually was involved in, and but we had very strict rules. And if there was a stock that was trading at 50 cents and that was a downtick, and you wanted to short that stock, you had to be on the offer at 51 cents. And that was it. That was the rule. Everyone knew what the rule was. And if someone wanted to come in and buy your stock at 51 and you take a legitimate short position and report it to the authorities as a real short position, that's fair game.
Yep.
But under the current rules, as a seller, today I could hit that bid at 50 cents. And despite the fact it's a downtick. And the next bid's 48 cents. I could hit that bid. The next bid's 46 cents. I could hit that bid. The next bid's 43 cents. I could hit that bid. I could drive that stock down to 30 cents if I had enough money to do it. And there's no regulations that prevents me from doing it. Back when I was a floor trader, you could not do that. And that protected the Canadian financial markets against the theft that's going on in the current system. And now today it's even worse because we have computers doing it. So you set up algorithms where they take advantage of these low cap illiquid stocks, and they have a view. Someone says, okay, there's a financing going to happen with this particular company because they're running around Toronto, New York, Montreal, wherever. We know they got to raise 10 million bucks. And so we're going to drive that stock down 20% to buy it back on the private placement. And we're going to cover our short on the private placement. 15 years ago, you couldn't do that. Well, actually 8 years ago, you couldn't do that.
Yep.
But today you can do that.
Yep.
So there's abuses that are going on across the system that we have to prevent. And this is just not mining. This is right across the Canadian financial industry. We got to protect the Canadian markets against these thieves.
Yeah, I'm with you. Ryan, what are your thoughts?
I think Keith nailed it. Look, the tick test has been around for over 100 years. It was brought in for a reason. It survived for 100 years for a good reason. And there's no reason why, with this world of technology, we can't link all the exchanges or come up with some method of reinstituting the tick test, because frankly, it's hurting the smallest companies. And if the smallest companies don't get a chance to grow here, either they never become large or they go somewhere else to do their growing, and that hurts everyone. I was also a floor trader myself, and I completely agree with what Keith is saying here. Everyone knew what the tick was, and now not only does nobody care because there's no rule on it, but if you wanted to figure what the tick was across all the different trading venues, there's no way to be sure, because it's not a consolidated tape that delivers that. So I'd love to see the return of the tick test, especially in the sections of the market where market efficiency as taught by the Chicago School doesn't really apply. So either the entire country or some portion of market cap that's set really, really high would be the right place to bring it back. And I also want to speak to what Sean said. He's absolutely right. It's not a mining issue. We care because it's mining for us. But this was in marijuana stocks. This is in oil stocks. This is in biocare stocks. This is everywhere. It's a market structure issue for the country.
Yeah, I 100% agree. I mean, it was interesting this week. We had the expose of the, I don't know if you caught it, on the Anson funds and some of the alleged tactics that were exposed in that article. I don't know, I mean, obviously the truth will come out, I guess, in probably some investigation and what'll ultimately happen. But I mean, clearly the front running, where people were being, stocks being shorted before an issue and then covering in the issue. And that's just got to stop. I mean, that's one of the things the task force, to their credit, has come out and recommended as one of the recommendations that they believe they'll be coming forward with, is that they'll make that illegal for companies to be shorting a stock before the financing. They'll have to sign some affidavit that they're not doing that, and we'll have to put some teeth in that. So that would be a good outcome of the task force. And I see, yesterday, obviously, IROC and OSC put out the whistleblower thing, just whether that's in response to, the Anson situation, or if it was already in process, if it was in response to, say, Canadian Mining or other people that have been talking about predatory short selling, we don't know. But I mean, that's a step in the right direction, and obviously we need more, I think, and we need to make it policy, because if we don't make it law, these sharks that are currently out of the water right now, I've talked to a few people saying that they've noticed the bots are out of their market. So it'd be interesting to see if that's actually happening. Sean, do you have any thoughts on that?
Well, I think, it's always interesting to me that the regulators take such a high level of interest in protecting the hedge fund guys and the short sellers. I mean, I've had so many experiences where the priorities of short sellers outweighed the benefits of the shareholders of the companies that were the subject of the short. If you do have an incident, IROC is far more likely to side or be scared of the litigation from the short sellers and side with them than they are to side with the company that maybe has an incident, a hostage taking or a shutdown of their some unforeseen incident, and these guys are allowed to go in there and rape and pillage, and IROC stands back and lets it go. It's been ridiculous that overall Canadian regulators have had an attitude of everything in Canada is too good for Canadians. Let somebody else buy it. They've had a really soft stance on hostile takeovers and short selling, and this is Canada's just bonanza land. In the current world of anonymity, we all Canadians as traders, we face this know your client rule, but those are not the people. There's no know your client on the hedge funds that are trading or shorting these stocks right now. There's no, other than if you don't live within the Canadian borders, you have no consequence. You can do whatever you want, and all the banks are as Keith said, if you know there's a financing coming, you knock the stock down 20%. You and your banker buddies, the bank's collecting a commission on the deal, and they don't have to do anything because they know they got a short cover lined up. So they take a 3 to 5% pound of flesh out of the junior target for free, no work, and then the short seller absconds with a 20% profit, maybe within a few days. And IROC, spends all their time investigating the companies and trying to hold them to task, but does little to investigate this, does little to protect Canadian companies, does little to connect IT. We've seen so many companies get wiped out in Canada, from BlackBerry to Nortel to the Avro Aero to the to Renault Depot, and then they tried to take out Cameco in Saskatchewan. And for the most part, the regulators have just pushed the Canadian companies out of the country and let them be purchased by foreign players. And this short plays and algorithm trading is a good part of not Canadian companies not being able to maintain their valuation, which sets up the whole house of cards. And it's why this country, is not benefiting. We don't have a single mining house left except for Teck Cominco, and thank God that they've got a double voting share. But we lost Inco, Falconbridge, Noranda, Alcan, all these companies that should have been world competitors with Rio Tinto, BHP, Vale, and these bigger companies have left Canada and been and sold, and essentially due to weak regulation.
Yeah, Keith, what are your thoughts?
So look, I'll go back to the basics. So the reason why there's a regulatory system in place, whether the SEC, the OSC, the BCSC, is to protect the small guy on the street, and and the regulators have a position within the marketplace to do their job. Unfortunately, over time, the banks have got more and more power. In the day, when I was much younger, the TSX or the TSXV was basically 100% of the market. Now we've got multiple markets, and we got all these computer trading, and this has all been driven by the banks. So what has happened in our system is, we started off with the governments actually regulating the system as they should for the benefit of the small investor. But over time, the last decade or decade and a half, they've allowed the banks to take control. So the banks actually write the rules, and the governments, through the regulators, have stepped back because it's so complex now. I don't even know if the governments even have the capital to have the people to watch the system, because the banks are just so sophisticated now, and they've got the computer engines behind them where they can just go around the regulators. You see it with all the fines with the banks. You see all the manipulations going on in the world. It's a farce. And the banks have absolutely devastated the retail investor for their own profits and benefits. And the Canadian government, through our regulations, through our regulatory bodies, have let it happen. And it's time the government actually steps in and puts the rules back in place that protect the investors.
Yeah, 100% couldn't agree with you more. I mean, we had Eric brought on, I guess, just around February, March, Sean, when we did that other event, and I know Eric is huge on that point. Is like, the stock markets were created so individual investors could invest in multiple different opportunities, and companies could access capital. It wasn't invented so that exchanges could profit or banks could profit by ownership of the exchanges or make commissions. Yeah. It's turned ass backwards, and we got to get back to fundamental principles. First principles.
The TSX went public. That was the end.
Yeah.
Like the TSX should never been allowed to become a public company.
Yeah.
Period.
Yeah.
And then the banks own the TSX, which even makes it a bigger joke.
Yeah.
So,
yeah.
Anyway.
Well, listen. You know what? Clearly we're on the same viewpoint on that side of things. Brian, go ahead. You want one last kick at the
yeah, just to keep it super quick. I always try to be optimistic about the future on these things, and you guys are absolutely right. The system is running backwards right now. But I ask myself, given that the Anson document, we'll call it a document, the allegations and the good reading came out, and then within 2 days or 3 days, the OSC reminded everyone of its whistleblower policy. We don't know if that reminder was already planned and it just happened to come 2 days later. The OSC is not going to tell us that. But if it turned out that it was published as a reminder in order to reach out and find the author and say, hey, you should be reaching out to us to help us police these markets, that's actually a little bit of good news compared to in past years where maybe they wouldn't even have noticed at all. The whistleblower policy is not new. It's at the OSC, at least, it's been on the books for years. And so for them to put out a reminder, I think is, for me, a little piece of hope that they're finally getting it. Yeah. What Terry and Save Canadian Mining are doing is bringing to the light something that has been in the dark for a long time. It probably is not on the radar screen of OSC staff in most cases. As Keith points out, they're busy dealing with the large banks. And there's been no voice for the smaller companies and the investors in the smaller companies that could get through to the OSC staff. And I'm hopeful that this is actually a step in the right direction.
Yeah, I mean, we're hoping that we can build on some of this momentum and drive this over the next, I guess, 2 months, really, where our philosophy at Save Canadian Mining was that we had to, Ontario had a task force. They were reviewing this issue, or in terms of the Ontario Securities Act, and when we lobbied the Ford government to come in and instruct OSC to reinstate the tick test. That we were said, hey, look, you got to talk to the task force and get them on side, because it's already started. We don't want to start too fast on this. So we've had a submission with the task force where I'm actually meeting with them again on Monday or Tuesday next week, and we'll be presenting our the most recent data. We met with IROC. We actually got short data from IROC after a little bit of tooth pulling, but we did potentially get it. And it shows that there's definitely causality here, that since they changed the rules, that there definitely is a problem. Like 20% of the stocks are short, and that's not been conductive. And we saw it in that chart we posted at the top, what it means in terms of our stock prices. And that's capital that's been stolen, as Keith said, by basically offshore hedge funds and the banks, and taken it of our individual investor pockets. So you got to make the government aware of this and what the impact is to its citizens and make a change. Make the change in Ontario first, because obviously securities is a provincial jurisdiction in Canada. Federally doesn't really have the stroke. So we got to change it in the biggest jurisdiction in Ontario. And then I'm sure BC and Quebec and Alberta and the rest of the provinces will sign on, because it would be productive for their capital formation, for their companies and for their investors. So that's been our approach. So we'll keep on, hopefully with your help and the help of other people that are listening today to do that.
And Terry, as you know, the data is not always easy to find. We've had to go through different, if you're trying to build time series data to make the kinds of charts and comparisons, when TSXV hired S&P Global to start running its benchmark, there's not a lot of overlap to the previous TSXV mining subsector index, and then there's almost no overlap or data set connecting that to the old Vancouver mining subsector. So you can't build a time series of data very easily. It takes a lot of digging and a lot of time. And even then, you need to make some assumptions. But the data clearly shows that there's a problem once you get it all pulled together and you can begin to show it around. Everyone sees it.
Yeah, for sure. So, at this juncture of the program, what we like to do is take a little break, and we want to sort of talk to the audience. Like when we recruited the audience, we said, in addition to learning about the short problem and educating people as to that, we'd also learn about some of the great supporters we've got and what they're doing and in their own companies. And we're super lucky today to have two of the best companies. And on full disclosure, I actually own both companies. I've got the guys probably know John Duty from the Stansberry Group, the analyst. He's probably my favorite analyst in terms of the big companies, and he has a portfolio of basically 10 gold and 5 silver, and basically on my senior mining sort of chunk of my portfolio, which is the biggest chunk of my portfolio, I have 15 equal positions, and I have equal positions in First Majestic and Cisco, and love those companies. Keith, we're going to start with you first. Tell us about First Majestic, and we've had silver rise 70%. We need First Majestic to rise 70%, brother. What's going on?
Well, I haven't done the math, so I'm glad you are. But first off, Terry, thanks for putting this together. This effort to change the regulatory environment in Canada, I think, is a very honorable effort. And with Eric behind us, and some of the press that we're getting, and the current review that's going on in Ontario, which of course will affect the entire country. I'm hopeful that these efforts will actually make change that are long overdue, and because restoring the uptick rule to me is would be hugely beneficial for the entire financial markets within Canada, and then take away some of these predators that we find ourselves unfortunately having to deal with. And a company like First Majestic, it's like the stock trades 5 million shares a day, so it's like it trades like $100 million in value a day or something crazy like that. So a company like that, it's not that relevant. But for a lot of my other portfolio, I think I have got a portfolio of something like 30 miners, most of which are easily less than $100 million market caps, which are affected every single day by this issue. And I look at these stocks because being an ex-trader that I am, and I have my own trading system, and I watch these algorithms through CIBC, which is like probably the biggest black box in the country. Trading these markets on these unlimited 100 share offers that don't seem to ever end, right? And you could buy 100,000 shares and buy, you'll get 1,100 order fills, and the offer's still there, right? And you just kind of shake your head. You go like, wow. And it's just all computers, right? And it's taken away it's just really changed the financial environment to the worst, in my opinion. And and only the regulators, only IROC, only the government has access to the back door of what's actually going on in the system. But just based on my knowledge, based on my 30 plus, almost 35 years of trading this market, you could tell that there's stuff going on that should not be going on, right? And But anyways, I don't want to get off topic, but I am very passionate about this, and I'm there to support and anyway. So about First Majestic, look, I put the company together 18 years ago. We're CEO, founder. We're producing something in the order of 24 million ounces silver equivalent a year. We produce 2 metals, silver and gold. All in Mexico, we got like 5,000 employees. We're loving the current metal price environment, and we got a lot of growth coming over the next 2-3 years. And it's a great company to look at. I suggest your listeners look at our website, firstmajestic.com. Call our investor relations, look at our PowerPoint, and lots of good stuff happening there.
Thanks very much, Keith. I agree. Sean, now over to you.
Yeah, sure. So we started around a similar time. Well, Cisco started in 2002, and I was a private equity fund manager. Somebody called Eurasia Holdings, which I had founded. We've evolved through the group. Obviously, our big success was finding Canadian Malartic, which is now Canada's single largest gold producer at about just under 700,000 ounces a year, with the Canadian Malartic mine, which recently had a 10 million ounce discovery underneath it. So the gift that keeps on giving, and that's really the cornerstone asset in the Cisco Gold Royalties, which is about a $2.5 billion company today. And then within that, we have what we call our accelerator group of companies, which is a lot of incubation and hard work that goes into starting companies that are basically small enough that they're subject to the issues that we're talking about today. We've incubated 7 companies there in 6 years. Obviously, the most successful has been Cisco Mining 2, which we took from an $8 million market cap in 2016 to $1.4 billion market cap today, with the Windfall Lake discovery in northern Quebec. And then a few others that you might not know as much about, like Falco Resources with the Horn Mine in Ronde-Noranda, Quebec. And then we were the driving force in the financing behind Victoria Gold, which has now built the biggest gold mine in the Yukon. We produce about 200,000 ounces a year. And then on to Barkerville Gold Mines, which we own somewhat within OR right now. And then a few other things that we've incubated along the way, like Nile Bay and Talisker and a few other juniors that you can see on our website. And we end up fighting this battle that we're talking about today quite often as the largest shareholder of these companies. And nothing really makes me happier than catching a guy short on a financing and then putting the squeeze on them. It is something that we do celebrate if we can put the squeeze on some of these more or less scrupulous, dark ops guys that are out there lurking around and damaging the Canadian companies and really sort of more importantly damaging the biosphere of investment that we work with, because between social media and all the negatives and the amount of the problem I find with regulators is instead of looking at the actual dark horse or the dark ops guys, often they go after the shareholders of the companies. And that has a much more negative effect in terms of your ability to function in the marketplace than it does than going after the real criminals.
Yeah,
it's a little bit like the cops, arresting the guy smoking a joint on the corner rather than the Colombian drug cartel, which is a real job and really hard to go after. So that's where I see it right now. But I mean, we've set up a business model, where we have a platform. We try to protect our investcos, and we try to make sure that they're not as subject to that game as some others might be. And we tend to carry 10 to 20% of the equity of the outstanding company when we do come in, and we're always waiting to see if somebody tries that game.
Yeah, fair enough. Well, listen, it was interesting. When last week or 2 weeks ago, we had a group of juniors on, and one of the comments that came out was, if we tried to close our stock up 5 days in a row, we'd be in handcuffs and heading to jail. But those short sellers, they can close you down 5 days in a row, open you up down every day, and nobody calls those guys. It's sort of like it seems like it's just not a fair system. But hopefully through our advocacy, we'll do that. And thanks, guys, for your updates on First Majestic and Cisco Gold Royalties. And for sure, the audience should check those companies out. And their web pages are really good spots. We've got a gold silver research firm on the line. It would seem wrong to not explore what our esteemed research team at Neumeyer thinks about the markets. Brian, why don't you tell us a bit about Muir and what your thoughts are on the precious metals markets today.
Sure. Thanks very much, and thanks for having us on. We've got a 35-year-old brand as the best, reliable, smartest, clear-thinking forecasting shop in metals in the world. Our customer list includes lots of people who are on this webcast right now. Generally, we sell our work to CEOs of mining companies and the asset managers who own them, and occasionally individual investors. You can go to our website, murenbeeld.com. The word is Dutch, so it's a little tricky. I'll spell it out. MURENBEELD.com. Dr. Martin Muirenbeeld's got a PhD from Berkeley in comparative currencies. He started in the late 1970s doing forecasts at the request of Noranda, and they would use the forecasts to figure what capital spending they should be taking on, or at least as an input to that conversation about capital spending for growth or new projects. Every forecast we put out has a B, and C, so you can think of that as a bear case, base case, and a bull case. And then we always give you the probability we think will apply to each of those cases, dropping that down to what is really our probability weighted or our expected result. But by giving you all of those cases, you can figure out for yourself what you think the worst case is going to be and adjust your plans accordingly. The other thing we do is we don't forecast a single price. And you hear this a lot in the news. You know, Goldman Sachs says $3,000 gold. That doesn't help somebody who's running a company. It doesn't help someone who's making an investment, because what if it doesn't get to 3,000? Goldman was wrong, but that actually doesn't tell you where gold's going to go. It also doesn't tell you if gold's going to go there for a single 2-hour stretch 5 years from now and then fall back down. So everything we publish is actually time-weighted average. So right now, we generally run about 3 years out. So right now, we're forecasting what we think the average price of gold will be in, if I get my math right, the fourth quarter of 2021 and into 2022. We do that for gold. We've been doing it for gold for, like I said, 35 years. Just Friday passed, so just 4 days ago, actually September 30th, we've published for the very first time on silver. And Keith, I hope you've seen a copy. If not, let me know. I'll send it over. And we've expanded our team. We've hired Dr. Tom Brady. Tom's got a PhD in mineral economics from the Colorado School of Mines, which is lovely. But he was also the chief economist for Newmont for 15 years. So he was responsible for all of their forecastings, as well as the cost of capital calculations and the discount rates for operating in different countries. So we're really excited to have Tom join our team. And we are a subscription research business. We don't take ads. We don't sell financings. All we want to do is be accurate and help everybody else get the metals price right. Because if you get the metals price wrong, lots of other things are hard to correct after that. So there you go. I'll tell you, just for the audience here, our silver probability weighted, and these are time weighted averages for across the quarters. We're going to call out fourth quarter of 2020 is $26, and then out to 2022 first quarter, $38. That's our probabilities. And the envelope, the low side is basically 18, and the high side on the bull case as we get farther out to the end is 60. So that's pretty exciting stuff. And we have no secrets. All of our math is available. We give presentations on this to boards and directors. And we're happy to hear from anybody who wants to reach out with a question. You can email me at Brian, BRIAN, at murenbeeld.com. So that's our silver. And then in gold, where we have an even longer brand, our forecast right now, 2021 first quarter, $2,100. And then by the end of the year, 2021, we think the fourth quarter will average $2,455. One of the things we also do that is we do research on demand. So somebody might call and say, how much geopolitics is in the price right now? We do that kind of work as well.
Cool.
That's what we do.
Well, that's interesting. Sean and Keith, I want to get your reaction to, on gold and silver prices. Just obviously you're big in the business, and you must get a lot of different perspectives on this, and you obviously have a view on it. So it'd be great to share that with the audience.
Sure.
Sean.
Oh, Martin, a personal friend. I've known him an awful long time. And in Martin, we do believe. We shared the stage with him on many occasions. And, in terms of where we see gold price, obviously, the simple answer is it's a fear rating on what's going to happen to the US dollar, how much inflation will come into that dollar, and what the damage will be by the current, printing machines in terms of increasing money supply by trillions of dollars in an unprecedented matter. If you're a junior mining company and you double the amount of shares that you have outstanding, you can well expect your share price to drop by 50%. Gold is the only one that doesn't have any, and gold and silver are the only currencies that trade that don't have any debt behind them and no government control on them. So I think that, as safe haven becomes more importantly, we saw gold go from $1,300 to the current $1,900 level on the back of these, risk on trades. It certainly seems like the world is becoming a much more risky place than it was even a month ago. And now with Trump getting COVID-19 and sort of the in that debate, which I think created somewhat amount of chaos. I think we're in pretty good shape for gold price. We're hoping for north of 2,000, but we're planning and engineering for 1,250, 1,300 in all of our projects.
Mm-hmm. Keith.
Well, Sean, that's crazy. You know that, right? So, anyways, there is a question from Otto that came in from Australia. It's something, Terry, you should probably look at. It's quite interesting. Yeah. I actually wasn't aware of that, but it's something maybe the Canadian system should look at it to emulate, because the Canadians are always quite passive in bringing new regulations in, and if there's another country they could point to that is actually doing something maybe a little bit better, maybe that's an example. I know very little about it except for that text message that came in, so maybe it's worth something to
we'll chat about
it. Yeah. So anyways, look, talking about metals, I disagree with Sean to some degree. Gold, I don't believe, is a fear trade. I think gold is just it's a currency. It's a granddaddy of all currencies. So it's like any investment, right? So whether you carry euros or yen or dollars or Canadian dollars in your portfolio, gold is just a part of your currency portfolio, and it's up to the individuals on how much of any of these currencies should be in their portfolio. For me, I like to have a large percentage of my assets, my currency assets, in gold. Silver is a completely different issue. Silver is a strategic metal, and it's way beyond precious. There's more gold on the planet today than has ever existed in human history. So it's not a supply and demand issue. Silver can completely the opposite. There's less silver today on the surface of the earth than there ever has been in known history. So, and we're using it at rates that are not sustainable at current silver prices. And I think there's a disconnect between that rationale and the current price of the metal. And if you just this call itself, and many of your listeners may hear me rant about this because I feel like I'm a broken record sometimes, but this call would not be possible without silver. Virtually everything we do as on a daily basis would not be possible without silver. If we as a human race expect to achieve the goals that we want to achieve over the next 10, 20, 30 years to electrify this planet in sustainable long-term ways, we're going to need way more silver. And at current prices, there's just simply not enough metal. We've had 4 years of declining production and sustainable consumption rates, and you've got a perfect storm in my view. And then at some point, of course, the big consumers like the Samsungs and the Apples and the Teslas and the Panasonics and the Toyotas and the BMWs that require vast quantities of silver are absolutely paranoid that any of us are actually going to figure it out. because they're all, every investor on the planet is going to front run them all and drive it like cobalt was driven, and uranium and platinum and you name it. So they try to keep the tightest information out there to try to always water it down as if it's not an important metal, but it is actually, think about it, the silver and copper are really the future of the human race. Mm-hmm. So from an investment perspective, in my opinion anyways, and maybe time will prove me wrong, but in my opinion, those two metals have to be in your portfolio.
Yeah, I agree. Yeah. Listen,
so before you move on there, Terry, I'd love to add something to
it. Yeah. Go ahead.
Just said real metal in the sense that it moves up and down with GDP, and there's lots of industrial buyers, and once it gets into that use, Keith's quite right. It doesn't come back into the market in the way that jewelry on the neck will come back into the market later on in life in the same format as pure gold. There's something else I just want to add, and this is now that it's press released, I can say it. I'm involved with a company, Zen, Z-E-N, and we've just finished testing with the University of Western Ontario silver-doped graphene that kills the coronavirus. And so what I want to point out to Keith and everyone else is there's going to be a growing market for silver based on its antivirucidal properties. I mean, silverware, we call every utensil in the drawer at our house silverware, but the reason we call it silverware is because for hundreds of years, people have been using it for its antiviral properties. And seeing as COVID is not going away anytime as quick as we all hoped, that's going to be an ongoing additional use case for silver.
Yeah, interesting. This that's all good. One of the things
I'm not sure if you can see this, Brian. This is a silver spray right here. You see that silver spray, and I spray this on my masks. So actually, I have a cloth mask, or actually several cloth masks, and every morning I spray this on my masks.
Cool.
Fantastic.
Yeah.
I was surprised. I went to, reviewed the, your presentation on the first Majestic site, Keith, this week, just to refresh my memory of things. And I, obviously a lot of time and discussion about the industrial applications for silver. And, I always knew there was, but I had, I didn't really recognize it as such a big, growth in the electrification side of things, and now obviously maybe antivirals will be another thing. So let's take a few questions from the audience. Keith mentioned there was a few in the post there, and I just want to hit upon those. So one of the first Otto Snell, thank you for your comment. He points out that in Australia, I guess, only the top 100 companies can be shorted and excludes all junior exploration plays. Well, that would be a wonderful rule. Maybe, as Keith said, we can, introduce that. I was unaware of that, and if that's indeed the case, then that's a good point. Philip,
and there have been periods of time where Australian companies would leave Canada to go list in Australia for higher valuation and easier access to capital. And then it's not just a mining thing. This is a little off topic, but I'll point out there are two publicly traded fishing companies in Canada, and they're trading at half the EV to EBITDA of the Nordic countries. And there's probably a shorting reason related to that.
Interesting. Paul mentions about, shouldn't the mainstream press be picking up on this and advocating for you? And what has your success been with the mainstream press? And we've reached out, and generally speaking, had fairly little uptick from these guys. No pun intended there. But I was on BNN early days, and what's funny, it was supposed to be sort of a puff piece, but in terms of supporting the cause, but then it turned out to be they started to flag about the some of the old historic problems in junior mine promotion and a shady mine promotion or something like that. He asked me about a couple of specific companies I had no idea about, and I said, anybody who's actually a really serious mining investor and builder developer wants the crooks to go to jail because they make it bad for everyone. I think now with the internet era and everything being so much more sophisticated, it's harder and harder for mining promoters of the old classic ways to sort of pump and dump stocks the way they used to, and that's a good thing, and I think we're all sort of excited for that. But generally speaking, the press has not picked up this advocacy. There's a few theories on that. Some view that there's so much money on the short side of this game. Like, these guys have made billions and indeed trillions globally on this thing, and they influence the press. They have a lot of cash to work with. So the individual small companies or the individual enterprises, like when I started this out of the basement, just to try and before I left mining, I thought, Jesus, I should try and change something. I've got like 1% of my wealth in mining at the time, and I thought, before I leave it on my watch, I should try and change this rule. But I mean, that's just a small individual, and luckily, Eric picked up on it. He came in, Eric Sprott, and became the big help. And then you guys joined. We were trying to make a grassroots campaign of this, but we're up against some big press machines that the banks own, and that's the tough part. So we have to get individuals to be passionate and push the things out, and we have to get our mining companies to be passionate and support and push the thing out, and hopefully make a difference, on this. Going back to the questions, Philip asks, are there manipulators ultimately just creating the perfect situation where the miners will eventually soar in price when they're no longer able to suppress the price of precious metals for the miners? Sean, what do you think about that?
Yeah, I think that, it's there's always the quid pro quo. I mean, nothing you like to see better than a short sell. If there's a commodity downtick of $100 an ounce in gold, or $5 an ounce in silver, you're always happy to see that short cover come in as a bottom of the market issue. But I think the thing that we all need here is we just need to create a marketplace where investors are happy to be there, where there's no social mediation for the regulators and the supporters, and we need to have a group of people that take this seriously, as you and Eric and hopefully we have here. And we move forward. If I understood the question correctly, I'm not sure that I did.
Yeah, no, I think that's a good point. We'll take one more question here. It is a question for Keith. Keith, this is from Paul. He talks about the short position being high, and it's quite for some time relative to other silver gold producers. Can you comment? And thanks for your great work with First Majestic, and lots of positive things happening.
Yeah, thanks, sir. I did see that. Yeah, the short position on First Majestic is quite high. It could be related to just the silver short position, because there is quite a high silver short. And then because First Majestic is really the purest, of the majors in the space, I think we sometimes get picked on. The stock is very, very liquid, and it's a great trading vehicle for big institutions. It's kind of, over the last decade, has been kind of like the go-to silver name, whether you're got a long opinion or a short opinion. So I think it's just, become a huge trading vehicle for the end. I don't think there's any particular one, group. I think it's just the way it is, right? It's just, but there is another question here. It's from Todd. I'm not sure if you saw that one.
Go ahead.
He actually works for First Majestic, so I'm somewhat biased with his question, but he actually points out a pretty good thing. This came up in the IROC letter, where it actually said in that IROC letter yesterday, whereby they're suggesting that the hedge funds actually report short positions, because currently they do not.
I didn't know that. That's interesting. That would be very helpful.
Yeah, because it doesn't seem very fair if they just report longs and they don't report shorts. It sounds.
Yeah, it's like yours or Sean's comment that the perspective is sort of look after the hedge funds, as opposed to the perspective should be look after individual investors, look after individual companies. Yeah. That's really what exchanges were invented for.
Well, we've got a huge push from the regulators on transparency.
Yeah,
transparency for issuers, but then we have the predators that have no transparency requirements.
1,000%. Well, listen, before we go, I promised the viewers that we'd go around the table, and we've got some of the more experienced mining minds in the country, and we get a pick. It's pick'em season. So, Brian, we're going to start with you. You got to pick somebody in the mining space and say, hey, this is I've got, if I'm putting money down, I like these guys, I'm going to buy this stock. Who are you buying?
Well, I'll tell you, they're our customer base, so I'm not going to choose amongst my children. I will tell you some of what I do own is the GoAu ETF, which is run by Frank down in San Antonio. The reason why I own it is because it's recognizing the fact that a lot of these companies are in a better cash flow position than they've ever been in years. And you're starting to see dividend hikes, you're starting to see capital allocation decisions that make a lot of sense compared to the decisions that got made a decade ago. And that's the way at Mirror & Build we're going to do it.
Okay, sounds good. Keith, what are your thoughts? Who do you like these days?
You want me to pick some stocks?
Yeah.
Well, of course, my two favorites, of course, first Majestic. I'm the founder, CEO. Been there for a long time. First Mining Gold. I put that company together back in 2015. Got a huge portfolio of Eastern Canadian, Ontario, Quebec gold assets. Pretty exciting company as far as I'm concerned. I'm the chairman and founder, and I don't run it, but there's a pretty good management team involved with running the day-to-day, and suggest people look at it. Some of my side investments. I'm a big investor, big shareholder in Silver One. Have been for, over 5 years. My more recent investments, I've become a reasonably large shareholder in Newfound Gold. They've gone public, and they've got some pretty exciting stuff going on in Newfoundland. And Solaris. You got Dan Earl, ex-TD analyst, who left the banking career to take over as CEO of this new startup with Ross and a couple other pretty key people behind the scenes. I think Rob's there, Ross and Rob are there behind the scenes, and I'm a shareholder of that as well. I think it's got a huge upside. So
those are the good picks. Those guys. Sean, what about you?
One of the new ones that we've got that's got some pretty exciting stuff on the go would be Talisker Resources with the Braylorn deposit in BC. Kind of an unknown story, trading around a $30-40 million market cap. It's an old high-grade mine that was mining at 15 to 20 gram high-grade vein system. It's being re-drilled, a lot like what we did at Barkerville. And then the big one that's in our portfolio is Falco Resources, 6.1 million ounce gold equivalent reserves, and over 9 million ounces in the overall resource, but trading at $100 million while they sort through their permitting issue with the dewatering of the mine. But if they get that permit, I think that's a serious outcome. It's the old Horn mine that produced 11 million ounces of gold from the first 600 meters and 3 billion pounds of copper. So that's got some legs on it. And it's mostly just a permitting issue. The technical issues, the full feasibility and reserve status are already there. So not too relying on the drill bit to get success. It's more of a time-driven portfolio play.
That sounds interesting. I'm going to check that out. Last time I was asked, I picked a lithium play, CRE, but it's up 80% in the last 3 weeks. So that was a timely call. I didn't know anything. It just so happened that it was a good run. I like a couple that I've got a speculation on. I got Quebec Precious Metals. They're up in the James Bay in Quebec, and Gold Explorer got some interesting stuff happening there. I think they're underpriced and got some good upside. Then I like Scotty Resources in the Golden Triangle. They're Golden Triangle's sort of I like that area a lot, and I think they're going to have some good results here shortly. So from a speculative perspective, I like those guys. So that's it. So Brian, you got one more?
Well, because we finished the first round, I'm going to give you a non-silver and gold name. Zen Graphene Solutions. I'm the CFO and a director. Myself and some friends took it over through a hostile proxy fight in May 2018 because it had a globally unique graphite, which makes the world's best graphene. And graphene is going to be huge. So ZEN is the ticker.
ZEN. Okay, we got some good calls here today. Well, listen, I want to thank everyone for listening. and being on the call with us. I want to thank our guests for taking the time out of their very busy day. These are very busy people and doing some great work, and really appreciate you guys for coming on and helping us out here. And I would say to the audience, if you like what you're hearing, if you want to help the Canadian capital markets, then please, come to Save Canadian Mining and, join, tweet this video replay that'll be posted that you'll get and push it out as much as you can to as big as an audience as you can, because it's only through exposure to getting individuals on side and collective power of the people will we get government to listen to us and make the changes they should make, in our enlightened self-interest. So again, thanks very much for the guests. Really appreciate it, guys, and hope you guys all have a great day and a wonderful weekend, and we'll look forward to catching up to you soon, hopefully at once again in the real world at some mining conference, and catch up. All right, guys, thanks again.
Looking forward to it. Thanks, Terry.
Yeah, thanks
Terry.
everybody
Thanks for organizing this.
in the mining world for listening.
Okay.